Welcome everyone to today's December daily Q&A session. I'm Rachel Neighbors. You're here for Neighbors Group and Solo401k.com. We host these December daily Q&A sessions every day during the month of December so that you have a place to come and get your questions answered. There can be a flurry of activity at the end of the year, and we want to make sure that you have a place for support. So today is Wednesday, December 30th, one more day of 2020. We have a handful of pre-submitted questions, so I'm going to go ahead and jump right into those. If you have questions you want to ask live on the call, you can type them right into the chat on this side of the page, or if you click on the link right about here, there's a link that says Ask a Question. You can also type any questions that you have right in there, and we'll go over them here together. Okay, our first question comes from Anand. Anand says, if we are doing Roth contributions, the limit is $19,500, correct? Correct. How do you indicate this in the form? I think, Anand, what you're asking about is the contribution form. So I'm going to go ahead and share my screen with you. By now, you should be able to see the Solo 401k dashboard. You all have access to this dashboard as a Solo401k.com client. If we click on Forms and Contribution Form, that will pull up the contribution form here for you. So Anand, your question was about Roth contributions. That would be this one right here, this first checkbox for Roth elective deferral contributions. And yes, you're correct. The limit is $19,500. Your next question is, Anand, if we're also doing a profit sharing contribution, that 20% can only be non-Roth, correct? Correct. Profit sharing employer contributions are pre-tax only. Anand, you asked, will we need another form to fill it out? No, you can complete the contribution form for multiple types of contributions on just one form. So Anand, if you are doing Roth 401k contributions as an employee salary deferral, you'll check this box and input the dollar amount of the contribution. And if you're doing profit sharing contributions for the employer, you'll input the dollar amount here and check this box. That's how you can complete the contribution for your 2020 contribution to the Solo 401k plan. Anand's next questions. We'll also need to roll over some funds from a SEP IRA and previous 401k. We will need help with that after we get the tax ID and set up the bank account. However, does the rollover need to be done by December 31st? Great question, Anand. And no, it does not. The only thing that needs to happen by December 31st is to have your plan documents from us. According to the IRS, you can then make contributions right up until tax day. Rollovers can be done at any time. You do not have to do rollovers by December 31st. Once we prepare your Solo 401k updated plan next year, after we get the tax ID number from the IRS, then you can start your rollovers. And I'll just share my screen here one more time so that you can get a head start on this, Anand. Now, don't do this rollover yet, because remember, we need to get that tax ID number for you. But if we go back to the Solo 401k dashboard, you can click on the link here that says rollovers. There's a helpful tutorial video. Make sure you watch that carefully. It's only about 5 minutes long. And that tutorial video will tell you exactly how to complete this rollover request form. Once you complete the rollover request form, you'll do it one for each account. So one for your SEP IRA that you're rolling over, and one for your previous employer 401k. Complete one form per account rollover, send it to the custodian, and then you'll receive those rollover checks. The rollover check will be made payable to your 401k trust. You can then deposit the rollover check into your 401k trust bank account. So Anand, you'll want to wait until after we get the tax ID number from the IRS to initiate your rollovers, and then you can start moving those funds into your account. So that does not need to be done by December 31st. Great questions, Anand. Our next questions come from Venkat. Hey, Venkat, how are you? Venkat says, our LLC is a single member LLC and is in my wife's name with no employees. We are expecting around $120,000 for net income for 2020. Questions. Number 1, can the LLC fund to the solo 401k and amount limit? I think you mean max amount limit. Is that 25% of net profit? Great question. So Anand, I'm going to go ahead and share my screen. I know you guys see me do this every call, but it's because it's so helpful for us to be able to really like we're in the same room together, just chatting and making sure that you have the support that you need. So on the 401k dashboard, you'll see we have a link here for calculators. Anand, what you'll do is you'll click on contribution calculator. Or I'm sorry, this is Venkat's question. Venkat, you'll click on contribution calculator. You can also get to the contribution calculator from our website. If you put your mouse over learn and then contributions, you'll see the contribution calculator link is right here on the home page. So you can get to the contribution calculator a variety of ways. Now, Venkat, for you, your wife has a single member LLC. This is also known as a disregarded entity. So what you'll do here is you're going to select the business type of unincorporated sole proprietorship. Now, if your wife's LLC is taxed as an S Corp, then you'll want to select single owner corporation. But if it's a pass-through entity, that's a disregarded entity, and she's taxed as a single member LLC, then that's an unincorporated sole proprietorship. We'll then put in your net income of $120,000 and your wife's age. I'm not sure of her age, so I'm going to assume she's under age 50. If she's over age 50, you'll just change her age here. And what you can see, Venkat, is that of the $120,000 in net earnings, your wife is able to contribute $41,804 to the solo 401k. If you click on View Report, this gives us a bit more information, a bit more color as to how we're arriving at this calculation. So you can see here that the elective deferral amount is $19,500 plus your employer profit sharing contribution, and that brings you to $41,804. So Venkat, for your question, is the 25% of net profit? Yes, it is based on net compensation. And can you fund to the maximum? You're getting quite close. For $120,000 in net income, you're able to put away about $42,000 as a tax-deductible contribution. Your next question, Venkat, do I have to fund now, or is this just to open the account? Great question. We cover this one almost every day. December 31st is when the IRS says you have to have your plan documents from us. As long as you have the documents by December 31st, you have until tax day to make your contributions. And actually, Venkat, even if you were to open the account now, the IRS is closed for the rest of the year. Part of what we do when we establish your solo 401k is we get a tax ID number for your 401k plan. But since the IRS is closed, we can't do that right now. So what we do in the interim is we put in a placeholder, temporary tax ID number. That way we can still draw your documents for qualification in 2020. When the IRS reopens next week, we'll get your tax ID number for your 401k plan and update your documents, but they keep their original effective date for 2020. At that time, you can open a bank account and make your contributions. So for you, Venkat, the only thing you really need to do is submit your application at solo401k.com, and then we'll get started on working on your documents. Your next question here is, can the LLC owner draw a salary and make additional contributions, I think is what you're asking here. So yes, that is possible. This is a question for your CPA or your accountant on how your LLC is going to be taxed, or how your wife's LLC is going to be taxed. A single member LLC is either going to be taxed as a sole proprietorship, or it's going to be taxed for an S Corp, a corporation. That's a determination you'll make with your accountant or your tax advisor. And from there, you can determine if there's going to be a salary that's drawn. Now, let's go back to the calculator here for just a moment so we can see what the difference is if we change from unincorporated sole proprietorship as the business structure, and instead we select single owner corporation. So Venkat, remember you've got $120,000 in net compensation. and that allows you to put in $41,804. If instead you're a single owner corporation, you can actually put in $49,500. So sometimes being taxed as a corporation lets you put in more money to the solo 401k plan. And that's because those profit sharing contributions for the employer are a bit higher. Whether or not that's the right solution for you, Venkat, is going to be a question for your CPA or your tax advisor. Talk with them, find out how your structure is currently taxed, and see if there are any advantages to changing the tax structure. But this calculator here is going to be really helpful for you in determining exactly how much you can put away. Great questions, Venkat. All right, now we have a handful of questions from Robert. Okay, first question from Robert. Is e-signing okay as I've done? Actually, I think these questions are from Richard. No, let's see. I think these are all from Richard, but it says Robert. But Richard, if this is the Richard I'm thinking of, I think these are from Richard, not Robert. So Richard says, is e-signing okay as I've done attached? Or does the IRS require that I sign all documents in ink to be legal? E-signing is just fine, Robert. So you can do an e-sign. That's no problem at all. Can you please check the signature pages to ensure I entered the correct type of data in the right places? Usually our team doesn't verify the signature pages for you. That would be a lot of work since we tend to have applications come in every 5 minutes or so the last week of the year. I'll see if one of our team can review the attachment that you sent. But as long as you are signing and dating in all of the places, then you should be okay. Your question where it says, agree to be bound by the terms of the individual solo 401k trust dated, do I put the date I signed the documents or the effective date? You put the date you signed the documents. Good question, Richard. And what I want to do is walk through these signature pages with you. We did a complete walkthrough of the signature pages yesterday. So if you would like to see a complete walkthrough, make sure you check out the Q&A replay from December 29th. But one thing I want to bring to your attention here, Richard, and for everybody else, is make sure you read this cover page. We give you a lot of information here so that you can feel empowered to move through setting up the solo 401k and really getting started to use it. So right here it says, sign and date as the trustee, employer, etc. Even though your plan is effective January 1st, use the date you established your solo 401k as the sign date on the documents. So for you, Richard, you'll want to use your sign date as the date on the documents. Okay, it says Robert, but I think this next question is from Richard as well. There is a 401k plan beneficiary designation form. Both my wife and I are employees and will be contributing to the 401k. Do I have to fill out a separate copy of the form for her? Yes, since you are each employees in your company retirement plan, you'll each have money in the retirement plan, and that money belongs to each of you. Therefore, you will each complete a beneficiary designation form. Great question. Okay, next question. I think this is still from Richard. On the 401k plan beneficiary designation form, where it says account or plan number, do I enter the plan serial number? Nope, all you need to enter is 001. 001 is your account number and your plan number for your solo 401k because your business has the first and only 401k plan for your business. You have the first and only 401k plan in your business. So if we look at this beneficiary designation form here, Richard, you will complete your information in part 1 as the employee. Your spouse will do the same on a separate beneficiary designation form for her funds. And the account number here can be 001. And that's 001 for each of you. Great question. All right, next question's from Richard. Do I have to open my stock brokerage account by December 31st for me to get the 2020 tax deduction for contributions to be made to that brokerage account? Great question. You actually can't open your bank or brokerage accounts yet because the IRS is closed. As part of your plan establishment with us, we're going to get a tax ID number from the IRS for your 401k plan. While the IRS is closed for the remainder of the year, we put in a placeholder temporary tax ID number for you. This way your documents are qualified for 2020. When the IRS reopens next week, we'll get your tax ID number, update your documents, and they'll maintain their original effective date for 2020. At that time, you can open your bank or brokerage accounts and make your contributions and start your rollovers. According to the IRS, you have until tax day to make your contributions for your 401k plan. Okay, next question from Richard. Do I need to do any of the following to make the plan officially established? Upload any signed documents on your website, or send anything to the IRS, or send anything to my accountant? You are the plan administrator, so as long as you sign those documents, then you are officially activating your plan. That's all that you need to do. We do recommend that you upload a copy of the signed documents to your 401k dashboard, but that's not required. It's just a lot easier for you to know that there's a copy of your signed documents right on your dashboard. You can access that from anywhere in the world 24/7. If you have them printed or signed in a file cabinet or on a hard drive on your computer, those are not always easy to access remotely. Uploading a signed copy on your 401k dashboard ensures that you have access to your 401k signature pages anytime you want them. It's not required that you upload them there, but it certainly does make things easier for you. Nothing needs to be sent to the IRS as well. The IRS would be pretty overloaded if everybody who has a retirement plan, which is going to be hundreds of millions of different plans around the country, would have to submit those forms to the IRS. That's why we're here. We're your IRS plan document provider. We write your 401k plan. We keep it maintained and up to date with the IRS. The way that the IRS legitimizes our plan is through something called an IRS opinion letter. All of our solo 401k clients adopt our pre-approved plan. So Richard, you and your business have adopted our pre-approved plan. And as long as you are a client of ours, you have permission to use our documents and you are covered under our pre-approved plan. This way, the IRS only has to keep track of a few thousand companies like us, plan providers, rather than trying to stay on top of tens of millions or hundreds of millions of individual retirement accounts. So nothing needs to be sent to the IRS to formalize your plan because we have registered your plan. You've got that plan serial number. That means your account is registered with us. And we are your IRS plan document provider. We're your link to the IRS. You don't need to send those signature pages to your accountant either, but you might want to send them a copy of your contribution form. So Richard, if you go to your 401k dashboard at solo401k.com/login, this should look familiar. This is your solo 401k dashboard. Under forms, click contribution form, and then you'll want to complete this form by December 31st. You can upload a copy to your 401k dashboard. You can stick a copy in your file cabinet or share a copy with your accountant. The IRS does not expect, nor do they want, a copy of your contribution form because there's nothing for them to really do with it. This is your internal documentation as your own plan administrator that you intend to contribute funds to your retirement plan. Great question there. Okay. Next question's from Richard. My wife and I will be contributing to the solo 401k. Awesome. Are we allowed to have only one joint stock brokerage account in the 401k that we can both contribute to, or are we each required to have our own separate stock brokerage account? It's really up to you. You can have your own individual brokerage accounts, or you can share one. However, if you both share one bank or brokerage account, it is your responsibility as the plan administrator to keep meticulous records on whose funds are whose. So keep in mind that you and your spouse are each participants in the company retirement plan. Therefore, each participant's account must be maintained. There needs to be a clear history or record of the funds coming in and going out of each participant account. If you feel comfortable doing that in one brokerage account, then that's okay. That's your decision to make. If instead you prefer to have one brokerage account for your funds, one brokerage account for your spouse's funds, then that's okay too. Truthfully, most of our clients maintain separate brokerage accounts for each spouse or separate bank accounts for each spouse. It makes the record keeping for the plan a lot easier. It's not required, but it certainly will make your life easier from a record keeping perspective. Next question, can we use Interactive Brokers Trust Account for the stock brokerage account? Yes, we work with IB, and the trust account with IB should be just fine. Whether or not that's one or one for each of you is your decision to make as plan administrator or perhaps with your accountant. Yes, we support IB, that's just fine. Okay. Next question from Richard. Is there something on the IRS website that confirms it approved your company's solo 401k plan? Yes, there is. Let me get that for you. So what I did, I'll share my screen so you can see what I did. I do this Google search quite often. So I did a search for IRS PPA plan provider list. So PPA stands for Pension Protection Act. Without getting too nerdy on you, the IRS requires plans are restated through a document cycle every 6 years. We're actually going into cycle number 4. So there was the first document cycle, the second document cycle. PPA is the third document cycle. And in 2021, 2022, we're going to be going into the fourth document cycle. We have to re-up with the IRS every document cycle. Every 6 years, we have to re-up our qualification and approval with the IRS. And throughout that time, when new amendments are released, regulations, as a pre-approved provider, we receive those regulations. We have to write them in our own specific language, send them to the IRS for approval. They send them back to us with changes. We rewrite them. We send them back. They send us changes. We rewrite them. There's a lot that we do behind the scenes to get those amendments and restatements and changes in plan language and increases in contribution limits for your 401k plan to just make it, push button for you guys on your document dashboard. There's a lot that we do on an ongoing basis with the IRS to make sure that we're getting all of the amendments and updated regulations. But every 6 years, we have to reapply for that cycle. So this gives you a little bit of information about the IRS list of pre-approved plans. Tells you all about these. This is the cycle that I was just talking to you about, the 6-year cycles. But then the next list, I'm looking for this PDF. This is the one I'm looking for right here. PPA list DC. What that stands for is defined contribution. And I'll just do a search for neighbors. There you go. And there we are. We are a pre-approved plan document provider right from the IRS website. That means that as long as you are a client of ours, you have permission to use our pre-approved plan. If for some reason you are no longer a client, then we will update the IRS that you are no longer covered under our opinion letter. So we are responsible for keeping a list of all clients who are active and qualified, and our clients are on that list. Great questions, Richard. I'm glad to see that you're digging into using your solo 401k. So welcome aboard. All right. Next question is from Seema. Hi, Seema. So all we need to do until 12/31 is send you the signature pages and the contribution form. Is there anything else? And Yang answered, Yang, you're great. I love this. You guys are doing such a great job with this. Yang, you're right. We do not need a copy of that signed signature pages or the contribution form. Yang, you're 100% correct. Seema, once you sign your plan signature pages, you complete your contribution form, you can upload it onto your 401k dashboard. That's a nice place to just not have to worry about where it is. It's on your 401k dashboard at any time, but you do not need to send a copy to us. You are your own plan administrator. So you are responsible for keeping the records of the plan and making sure that that plan is in existence, which is what happens as soon as you sign the documents. Great question. Okay, so next question from Seema. Under which folder on your website should we upload the forms? The land each time, I think you're saying I land each time in a different folder. Where should it be to make sure you see it? So we don't need to see the forms. We do not approve or deny the way that you're filling them out. We are not your compliance officer. You are your own plan administrator. We are your IRS plan document provider. We write your plan. We keep it maintained with the IRS. We provision the plan, and you're the one that uses the plan and keeps track of the plan. But let me show you something here, Seema, that I think will be helpful for you. So if we go into the 401k dashboard, the easiest way to upload something is to click Add Asset. And then you can just say something like sign, plan, signature pages, and create. What this is going to do is create a folder under Assets. So now if I click Open, you can just drag and drop files there. So Seema, you might want to title that sign, plan, signature pages, or maybe you want to add an asset for your contribution form. You can do that any way that makes the most sense to you. Great question there. Okay, next question from Seema. Excuse me. What if there's something incomplete or filled in incorrectly on the forms and we notice it next year after the IRS opens? Does that mean we can't set up the solo 401k for 2020? No, once you receive the documents from us, then you are qualified for 2020. And we already have the documents provisioned for you. So all you need to do is sign the plan signature pages, just sign and date. That's very straightforward. Then store those in a safe place. Your formal election on your contribution is fill that form out to the best of your ability, understanding your estimated net income. If you need to adjust those numbers slightly as you make your contributions, that's okay. As long as you get in your application to us today, this is really one of the last days that we're taking applications. So as long as you get in your application today, we'll have your documents ready same day, and then you're qualified for 2020. So that's all. Only thing you need to do is get your application in, Seema. And if you already have your application in, then you're good to go. Okay, next question is from Yang. Yang says, not sure if this question was answered. If I don't have a 401k contribution from other places and I have $24,000 in net income from the 1099, can I put in $19,500 into the solo 401k as an employee and the leftover 20% of the $24,000 as profit sharing? All of these will pre-tax, right? Yes. Yang, you're 100% correct. So I'm going to share the contribution calculator here. That way we can run through these numbers. And yes, you are 100% accurate. So on the 401k dashboard, select calculators, contribution calculators. That's going to open up the contribution calculator here. Yang, I think you said you're 1099, so sole proprietor. So we'll want to put you as an unincorporated sole proprietorship. And then Yang, you said 24,000. So we'll put 24,000 in here. I'm going to assume you're under age 50, Yang, but if you're over age 50, let me know. So your contribution of that 24,000 in earnings, you can put in $22,304. And if you want to see how we came to that number, just click on View Report, scroll down, and then you can see here, I think this is being a little weird, the way that it splits things up. I would just say 19,500 and then 20% of the 24,000, which is exactly what you said, Yang. So that's what I would agree with there. Instead of saying, 24,000, don't make me do math on camera, 20%, 4,800. So you could actually put in 19,500 plus, what did I say, 4,800? You could put in, ooh, that doesn't work. Hold on. You're making me do math. 20%, 4,800. So 19,500 plus 4,800. Yeah, I think you can put in 100% of that. This, I think, is a little bit weird and off. I would actually disagree with this. I think you could put in 19,500 as your full employee elective deferral, and then 20% of your 24,000. So I think of the 24,000, you could actually put in 24,000. That would be my estimation. Of course, check with your accountant, but you can put in 100% of your net compensation for an employee. That's 19,500. You can put 20% of your net compensation, 20% of 24,000. That's 4,800. So you can put in 100% of that compensation. Now, I'm not your accountant, so if I miscalculated something, I'm not a math major, so if I miscalculated something, please make sure you're double checking those numbers with your accountant. But yes, I think that you're exactly right, and you could put all of that in, Yang. Great question. Okay. Seema, great question. Okay, can you briefly explain how calculations change on a multi-member LLC on the calculator? Yeah, so on the calculator, this is, it's slightly limited. It's thinking about either an unincorporated sole proprietorship or a single owner corporation. What's happening on the back end here is that it's bumping up the employer profit sharing contributions when you move to a corp. If you have a multi-member LLC, I think you should select single owner corporation, because for a multi-member LLC, you can do 25% instead of 20%. So and Seema, for your question here, for a multi-member LLC, I think put the single owner corp as your type. All right, great question there. And yeah, your follow-up question, does anything change if an LLC is taxed as an S Corp? Yes, I would then put single owner corporation in the calculator instead of unincorporated sole proprietorship. Good question. Okay, Venkat says, oh, good, you're here live. Hey, hi, Venkat. All right, can I change my plans after I completed my application in 2020? Tell me a little bit what you mean about that, changing your plans, Venkat. Do you mean, can you change your contribution amount? Change your business structure? Tell me a little bit about what you mean by changing your plans, and we'll come back to that. Okay, Crystal, I found you all on YouTube. Hooray, welcome. And there was a place for who referred you on the application. Is there a referral program if we share this with others? Yes, there is a referral program, Crystal. We love to help friends of our account holders. And if this is the Crystal that I think it is, then I think that we just got your application in last night. So welcome to you. I'm going to share my screen. And so Crystal, you should have gotten into your 401k dashboard by now, I hope. Click on rewards. This is going to pull up a special link just for you. And you can share this link with any friends and family, and that will take them to the Solo 401k sign-up page. Anyone that signs up through your link, you get 21% of the referral, or excuse me, of the setup fee as a referral bonus. So if somebody pays $498 to set up, right, that's the $399 plus 99, then you get, I think it's $104 or $105 per sale. We have one program partner who's earned over $50,000 in commissions. So it's pretty awesome. It's a really nice way to share your experience with others and let them benefit from what you're benefiting in as well. So that's one way to do it, Crystal, is to go to your Solo 401k dashboard and click on rewards. Another way is just if maybe someone's not ready to sign up immediately and they need to learn a little bit more about the Solo 401k. I think if you go to, yes, our website at solo401k.com, put your mouse over reviews and then click on refer a friend. This is a really good form to use if you have someone that doesn't know anything about a Solo 401k yet. So maybe they're not ready to just sign up, but you want to introduce them have a consultation with one of our experts. Fill this form out to refer your friend. We get an email saying who referred, and then we'll reach out to your friend via email, telephone. We'll contact them and let them know that, teach them a little bit about the Solo 401k. And then we can manually attribute them as your sale. And then the final way to refer someone is just to send a warm email introduction. Email our team at support@solo401k.com and your friend on that email, just say, Solo 401k introduction or something like that. Something super simple like, hey, I think you should learn more about the Solo 401k. These are the people I use, check them out. Something really straightforward like that. And then we can reach out to your friend, have a conversation with them, and see if it's the right fit. And if it is the right fit for them, then you can make a referral bonus. So it's pretty cool. We actually have a couple of clients that their referral business is their business for the Solo 401k. So it's a nice way to be able to share your experience. And especially, Crystal, for you, if you're a client of ours, you can speak from a place of authenticity. So you know us, you've gone through the process, you'll have an account, you'll be doing deals, you'll be doing your investments. So you can speak from a place of experience. And that's always the best when you're guiding friends, is letting them follow in your footsteps of success. So awesome. We're really glad to have you. Oh, Crystal, you're so great. You've learned a lot in the last 10 days. You really needed a tax shelter. So many can benefit. Yes, I agree with you 100%. You know, small business owners, we are the backbone of the US economy. Everyone here, all of us. And so often, small business owners, we have so much that we have to deal with in taxes and reporting. My belief is that the solo 401k is like the one little thing that the IRS and the government are giving us as self-employed, small business owners to kind of give us a leg up, because small business owners, self-employed people, especially now, this year has been amazing for the work from home movement, freelancers, independent contractors. I just think it's really exciting to see people take their own financial future in their own hands by making their own money through their own business and being able to parlay that into saving for their own retirement future. So we're really glad to have you, Crystal. As you can see, we're really passionate about this stuff. So we're really glad to have you. Welcome to the family. Welcome to the community. Welcome to the network. It's just really good to have you. All right. So Venkat, thanks for following up. If I change my mind and decide not to fund the solo 401k by the tax due date, yeah, your contributions are at will. That means you decide when and how you contribute. So if you complete a contribution form and then you decide you don't want to make the contribution to the solo 401k, then you can just skip it. That's okay. All right. Next question comes from Yang. Yang says, you mentioned that we don't need to do the tax form for the trust, but when we do the after-tax contribution to a Roth 401k, there would need to be a 1099-R form, right? Yes. Do I need to report that under my individual tax return? No. Where should I enter that info on TurboTax? So interesting with the 1099-R, you do need to give a copy to the IRS, but the taxable amount is zero. And the reason is because you're going after tax to Roth. So you didn't get a tax deduction on the after-tax contributions when you put them in the first place. Therefore, when you're converting after tax to Roth, it's not a taxable event. You still have to tell the IRS you're moving money around through the 1099-R, but you don't need to pay any taxes on that. Now, if you were doing pre-tax contribution or rollover, whatever, pre-tax money, converting that to Roth, then you would need to enter it onto your tax return. I don't know where it's entered on TurboTax. They usually have a question in Tax Act or TurboTax or the H&R Block Online. They usually have questions of, did you do a Roth conversion? And then you'll be guided through like a little wizard where you say how much you converted. So if you're doing after tax to Roth, Yang, yes, 1099-R, no taxes. If you're doing pre-tax to Roth, yes, 1099-R, yes, taxes, yes, show it on your tax return. Good question. Love it. And also, guys, just so you know, every January, we'll send you an email. Usually it's the first week of January going, hey, did you do any of this stuff last year? Did you do a required minimum distribution? Did you do an in-plan Roth conversion? Did you do a distribution? If so, you need a 1099-R. Here's some resources. Here's how you fill it out. And we'll guide you through that because the 1099-R is required by, I think it's January 31st. So yeah, you're right, Yang, you're right. Yeah, you would report it under your individual plan, your individual tax return if you go pre-tax to Roth. If you go after tax to Roth, there's no taxable consequences there, so it doesn't get reported on a tax return. Okay, Marie says, can you explain the MBR? I think that's Mega Backdoor Roth. For after-tax non-Roth contribution, can it be converted to Roth IRA immediately? Yes. Usually most CPAs will recommend the funds season in an after-tax bank or brokerage account for 5 to 30 days. But yeah, it can be converted as soon as you want. How about the 5 years and 59.5 rules? Those are, our plan allows for in-service distributions, which is what you would be able to do for an after-tax contribution. So that is not subject to the 5-year 59.5 rule. The 5-year age 59.5 rule is for making tax-free withdrawals. You're not doing a withdrawal here, you're doing an in-service distribution. All right, next question from Marie. The contribution to the Roth solo 401k, can it be rolled over to a Roth IRA? Yes. The contribution to a pre-tax solo 401k, can it be rolled over to a regular IRA? Yes. How are the 5-year and 59.5-year age applied to all three types of contributions? The 5-year seasoning rule is for Roth 401k and Roth IRA withdrawals, and you also need to be 59.5 years old. So for a Roth IRA, for example, you can withdraw funds tax-free after the funds have been in the Roth IRA for 5 years and you're age 59.5. When you meet those two qualifications, you can do tax-free withdrawals from your Roth IRA. For a regular IRA, for your regular 401k, there's no 5-year rule, but if you take funds out before age 59.5, there's an extra 10% early withdrawal penalty on top of your normal taxes. Now, Marie, anytime you're going to move money in or out of a retirement plan, especially in something like the Mega Backdoor Roth, we strongly recommend you work closely with your CPA or your tax advisor. Things can get really complicated really quickly. There's a lot of moving parts, and you want to make sure you're doing this right. If you need a recommendation to CPAs that are familiar with the solo 401k plan, you can find that right in our knowledge base. So if we go to our knowledge base at support.solo401k.com, you can just click on the support link from either our website or from your 401k dashboard, and then type in CPA. And you'll see right here, we have a solo 401k literate CPA list. Before you're doing required minimum distributions, before you do in-plan Roth conversions, before you do the Mega Backdoor Roth, make sure you have a competent CPA looking over your shoulder, helping you out, at least for the first time that you're moving funds around. This is your retirement funds. It's really important that you're doing things properly, and having your team with you to support you is a vital part of that process. We're here to be your IRS plan document provider and your logistics team, so we can help get those bank accounts open, brokerage accounts open, etc. And you're the plan administrator, so you're keeping track of the funds movement in the plan. Whenever you're moving funds around, make sure that your accountant or CPA is looking over your shoulder so you know you're doing things properly. Great question, Marie. All right, I think we have time for one or two more questions here. So and CMS have another question. If because of COVID-19, I've taken money out of my 403B account from my other job this year. Because of COVID-19, I've taken money out of my 403B account from my other job this year. If I don't pay it back this year, I can add the $19,500 taken out this year and pay it back next year, in addition to the $19,500 employee share for my solo 401k. So a total of $38,000 employee contribution for next year. In other words, the $19,500 I took out this year is not lost. So it's not lost, but it's not considered a contribution. And this is going to be a situation where I strongly recommend that you work with your CPA or your tax advisor. So the CARES Act, which is what allows these distributions from retirement plans, is very, very new. The IRS has issued pretty much zero guidance to plan providers and custodians on how and where you're supposed to be documenting on your tax return if you took money out and put it back. So this is very, very new. If you took out $19,500 from your 403B and you plan to put it back in the solo 401k, that's not a contribution. That's a eligible rollover distribution that you're putting money from one 401k plan to another. It's a rollover, essentially. It's not a contribution. Contributions come from your business earnings. This is not that. This is money coming from another retirement plan. So that $19,500 is probably going to be considered a rollover. And then the new $19,500 would be a contribution for your business earnings. So the 38 grand doesn't have to be lost. It can definitely go into a 401k with your accountant's oversight, of course. But I would not call it a contribution. The money that came out of the 403b was a coronavirus-related distribution that you're now putting back into a 401k plan. Good question. All right. Says, what are the benefits of voluntary contribution? This is the after-tax contribution. That's a little bit more than we're going to get into on today's meeting. The point of these December Q&As are really to make sure that your questions are answered for the end of the year so that we can help with your establishment of your plan. But I will draw your attention on our website. If you go to Learn Contributions and Voluntary After-Tax Contributions, and I will link this in our chat as well for you, Amensima, then you can read more about the voluntary after-tax contributions and see if that's something that is going to be a benefit to you. Okay, so you said, so I'll save $38,000 on taxes, right? I don't know that that's the case. I am not your CPA. I'm not your tax advisor. If you took money out of a 403B, then you probably already got the tax deduction for the initial contribution. You don't get double contribution tax deductions for putting it into another retirement plan. So I don't know how much you're going to save on your taxes. That's a question for your CPA. This is a highly personal solution and question. So I think you need to work with your CPA or your accountant to make sure that you can see what your specific tax deduction would be. All right. I think that that's all of the questions that we have submitted. We'll wait just a moment here to see if there's any more that trickle in. So as a reminder, tomorrow is our last December daily Q&A. Tomorrow is December 31st. Can you believe it? We're at the end of 2020 already. This year went simultaneously so quick and so very, very slow. But we're at December 31st tomorrow. Tomorrow is our last December daily Q&A. And let us know if you think that these Q&As are helpful. We'd love to consider having them on some sort of an ongoing basis for our clients. It's really fun to get to hang out and answer your questions, make sure that you're well supported. And if you haven't done so already, definitely make sure that you jump into the Solo 401k network at solo401k.net. Our experts are in the network every day answering questions. It's a wonderful place for you to meet other investors and to get your questions answered. As you can see, there's a lot of activity that happens in here. We do live events, trainings, our Q&As are here. You can get to all of our past events and trainings right by going to events and past. It's a really nice place for you to connect with other investors and make sure that your questions are answered. So if you're not already in the Solo 401k network, then do join us there. Okay, 2 more questions snuck in. These are our last questions. So Yang says, the max $57,000 limit, does it exclude 457? Thanks. Yang, do you mean a 457 plan? Are you asking about a 457 plan? Just let me know yes or no. And then Yang has one more question. Regards to the 1099-R, if it's after-tax money, no tax involved, do I still need to report the event 1099-R on the tax return? The 1099-R is not necessarily associated with your tax return. The 1099-R is for the IRS. So if you're doing an after-tax contribution and you're converting that to Roth 401k, yes, you need to put that on a 1099-R, but you should not need to list that on your tax return because there's no taxes due. Okay, yes, Yang says, if I already have a 457. The $57,000 limit does not exclude 457s, Yang. It depends on how much you're contributing to your 457. If you're maxing out your employee contributions in your 457, that affects how much you can put in your solo 401k. Employee contributions for 403Bs, 401ks, 457s, those are all defined contribution plans, and those employee contributions are across all plans. So if you're maxing out your employee contribution at the 457, then you would have $57,000 in your solo 401k available based on your net compensation for employer profit sharing contributions. Once you start to have workplace plans and other types of 401ks involved, in addition to your 401k contribution to the solo 401k, we strongly recommend that you work with your CPA to ensure that you're not accidentally over-contributing. Retirement plans can get pretty complicated pretty quickly, and we want to make sure that you're well supported. So engage your CPA Talk with your CPA so that they can help you with those contribution calculations. Well, I think that's going to do it for today, guys. You are so excellent. It's great to get to spend this time with you. And we'll look forward to seeing you tomorrow for our final December Q&A for 2020. Have a great rest of your day. See you tomorrow.